What is going on, my good old friends of YouTube? It is your boy Stas here. So listen up. We have 5 stocks to break down in this video, all of which have high short interest, very high short interest. We're talking over 25-30% for all these pretty much. And we're going to break down the charts, key levels that I'm looking at, where I'm looking to enter, exit, and full disclosure, I own 0 shares of these stocks right now. I don't own any of these stocks, but I am looking at them here in the short term. So with that being said, guys, and by the way, please do your own research. Don't buy or sell or do anything based on these videos, guys. These stocks that we're going to talk about today are very risky. And with that being said, let's dive into it. We have a lot to break down. If you all find value, hit that like button. Make sure to subscribe. And guys, come on. If you have not gone up to 16 stocks yet for Moomoo, it's free money. I don't know what you're waiting for. Just use that link down below or go to stassurfest.com/Moomoo. Get your stocks, 16 stocks, each up to $2,000. We'll talk more about that later. And with that being said, guys, cheers. Stay hydrated. Very important. Actually, let me take a sip of this water myself, guys. I'm getting a little parched. It's only about, what, 10 a.m.? Geez, I need some water, guys. With that being said, now let's dive right into the video. So it's currently about 10 a.m. on the East Coast right now. The markets opened up about 35 minutes ago, and you can see all the indexes right now, some more than others, but they're in the red. We have the Russell down 0.1%, actually holding up the best out of the bunch right now, which has not been the case over the past couple of days. We have that down a little bit. The Nasdaq's down 0.9%, so the Nasdaq's taking a big beating today so far. The S&P's down 0.4%, and the Dow Jones is down about 0.25%, with the VIX up over 2% as of right now. And we're not going to focus too much on the indexes in this video. We'll do that in another video later on today, so make sure you guys subscribe. But we're going to focus on, of course, these 5 stocks. And I just wanted to do a quick, brief rundown on the indexes right now. Again, as we're just 30 minutes into trading, everything is in the red. We have the metals down as well, and we have oil. Let me pull that up and see, guys. Crude oil right now is down as well. My goodness, guys, oil's down 1%. This thing is down about $10 a barrel. I'm not sure if you guys have seen, but oil hit $95 a barrel back in the end of September, just about a week ago, and now it's at 83 a barrel. This thing has pulled back about 12% in just about a week, and that puts crude oil in correction territory. And again, we'll break down all these charts more in depth later on today, so make sure you guys subscribe, hit that notification bell. It's completely free to do that. I appreciate you all for tuning in as always. So stock number 1 that has very high short interest that I'm looking at right now, and again, full disclosure, I own 0 shares of any of these stocks. The first one is SiriusXM. Let me actually pull it up and show you guys. I'm not sure if you saw, but a couple of days ago, this thing ended up ripping. I'm not sure if you guys saw that. More like a week ago, about 2 weeks ago, whenever this was. Yeah, 25th of September. Yeah, just about a week ago. We were at 350, 360 on the stock. And then all of a sudden, by the end of last week, it ran all the way to $5. And mind you, there's short interest here of 27%. So very high short interest, guys. Very high short interest, to say the least. And again, we essentially went from 350 to $5 in about a day or two. 41% move. Yeah, you could definitely say part of that is a short squeeze. Then we ended up pulling back a bit, giving back some of the gains from around $5 to about $4.20. That was a pullback of 15%. And now you guys can see, if I pull up the 5-day, 5-minute, we're starting to find, actually maybe the 10-day chart, we're starting to find a higher low right around here. And it looks like the trend is holding, at least as of now. I mean, by the looks of it, right? So I'm looking to see if Siri here, SiriusXM, ends up going back towards $5. Mind you, right now it's at $4.40. Do we go back to 5? Maybe retest that high from a week ago. Then if that were to break, maybe this little triangle that we're noticing on the 10-day chart, maybe that ends up playing out. Maybe we do start breaking $5 and start going. Let me actually set my another alert at $5. Maybe we break that point and start going even higher from there, right, guys? If we do break $5, we could fill the gap in my eyes to the mid 5s, which we hit in the beginning of August. Then from there, man, who knows? $7-8, that could be in the in range. But of course, let's not get too far ahead of ourselves because we're not fully breaking out quite yet. But we are seeing some signs of momentum building up for the bulls. And again, 27% short interest. Keep your eyes on SR, or not SR. It's called SiriusXM, SIRI. And by the way, guys, a lot of these companies that we're going to talk about, especially SiriusXM, they might not be the best when it comes to fundamentals, right? Long term, will SiriusXM be around? Probably not. I mean, in 10, 15 years from now, probably not. But we don't care about fundamentals. These stocks are not, this isn't about fundamentals. This is about short-term price action, share manipulation, whatever you want to call it, because these stocks are being shorted to the ground, which opens up opportunities for a potential squeeze. Maybe. Nothing's guaranteed, of course, but I can't say it enough. This is not a fundamental play. This is just a short-term trade on potential momentum that could build up here out of maybe $5, $5.50. We'll see, guys. We'll see. So that's SiriusXM. The next one's Celsius, which we've covered before on the channel time and time again. CELH is the ticker. This is now down about $55 from the recent highs, or around, let's see, percentage-wise, 25%. My goodness. So yeah, bear market is officially here for Celsius, right? Their short interest is 29%, to tell you guys that. Pretty high there, almost 30%. And we can see, even though we're down 25% now in a bear market, believe it or not, guys, the uptrend is still very much so intact. Yes, we're under the moving averages. We have a death cross forming. Not the best sign. And we have a head and shoulders, by the way, which pretty much played out now. Not the best sign. But look, trend still holding, like I said. We're above that 175, or not 175. Where are we now? 155, which still puts us above the trend. But one thing worth mentioning is if we do start slipping under 155, 50, well, we're actually already under 155. If we start slipping under 150, 145, we start taking the lows out from the beginning of August, that would not be good. That'd be a break in trend. But right now, we're pretty oversold, 25% down. We're holding trend. I feel like we could get a relief rally potentially here on Celsius. The next one here is MicroStrategy, which I haven't covered this in months, it seems like. But this is one that's also holding trend. You guys can see if I draw the uptrend out, or the trend line, boom, we're holding trend. But at the same time, we've been making lower highs for months. I mean months. This thing peaked at 475 back in the middle of, when was that, July? So almost 3 months ago, and now we're at 325, guys. So we are down a good 33% pretty much, which puts us heavy in a bear market on MicroStrategy. But the thing is, again, we're still holding higher lows. The uptrend's intact, and for all we know, guys, we could be breaking out anytime soon now, which we're not getting a sign of that yet, so don't get too excited. We're not getting the confirmation yet, but if this starts to take out, let's say 350, 360, 365, that's where the uptrend momentum could really start to kick in. Let me actually set my alert. Mark is at or above 350, and we'll see where it goes from there. And before we actually talk about the last two stocks, guys, don't forget to get up to 16 free stocks from Moomoo, the sponsor of today's video, by going down below or by simply going to stocksurfest.com/Moomoo. All you guys have to do is open up your account and fund it with your initial $100 deposit. Once you do that, you get 5 stocks right off the bat, and fund it with at least $1,000. You get 10 more stocks, totaling 15 stocks, and mind you, each of those could be valued up to $2,000, and fund your account at least $5,000 for a limited time. You also get a free share of either Tesla stock or Google stock, which makes this promo, guys, an absolute no-brainer. So come on, use that link down below, or just go to stocksurfest.com/Moomoo. And full disclosure, it is an affiliate link. It helps out the channel. I appreciate you all, as always. And with that being said, guys, cheers. Let's bang out these last two stocks. The first one being EOSE, ticker symbol EOSE, which is EOS Energy Enterprises, and this is one that's definitely on the riskier side of things, as all of these are very risky, but probably this is the riskiest one that we've covered, and it's just been sitting steady at about $2 over the last couple of months. You guys can see we've held that here for the last couple of weeks, but we also held it back in July, back in August. We held it back in May, right? 175, $2. So we're holding that point now. We're down a good chunk from recent highs, about 61%, more than just a good chunk, guys. Holy crap. We're getting, destroyed here in EOS stock, EOSE stock to be exact, the ticker. But the short interest is 30%, man, very high up there. And you can see this stock is definitely prone to squeeze, right? We've seen many squeezes throughout, let's see, August to early September. I mean, this thing popped many times. I mean, from August to early September, it went from 220 all the way to 550, guys. 150% move there for this stock. So let's see if we get any sign of a confirmation of a breakout, which, full disclosure, right now, we're not. But if we do start to break above, let's say, 250, 275, that's where momentum could really start to build up. I'm telling you guys, that's where it could really start to build up. So mark is at or above 250. I'll put another one at 275 here on EOSE stock. 275. Mark is at or above. And yeah, keep your eyes on this one, guys. And the last one for all of you guys that stuck till the end is Upstart. UPST is the ticker, and this one's also very risky. This thing's down from 75 roughly to $26 in just the past couple of months. 65% drop for Upstart. And today it's currently down about 2%. And it looks like here it's slowly drifting down from 35 to 30 to 28 to now $26. And at some point, guys, I believe we will see a relief rally. We're actually approaching a huge level of support right now, which is why I'm covering the stock. We can see 2025. That's a huge resistance from back in February, March, back in May. So that could hold that support here moving forward. And at the same time, to play devil's advocate, we have a head and shoulder. So this is actually interesting. We have the left shoulder right here. The head's right here. You guys see the right shoulder right there. So if we do start the break under 23, $20, all right, this goes out the window. But if we hold this spot, we start rallying $30, 30 plus, that's where UPST could really take off. And again, all these have very high short interest, and this one happens to have the highest of all of them, 37%. So keep your eyes on all these stocks, guys. They're very risky. Again, I can't say it enough. Please do your own research. But I'm watching them very closely, and I'm looking to maybe add some of these, maybe today, tomorrow, maybe some point next week. So what do you guys think? Let me know your thoughts in the comments. Hit that like button. Make sure to subscribe and follow me on X at Stas Talk Stocks. Link down below, and I'll catch you guys later.